Know thyself. Hello, fellow traders. I'm Curtis from Beyond Backtesting. I'm a futures trader, market enthusiast, call markets. Today's topic is on why investing is tough. I'm not going to say why you're not going to be a great investor. I've thought about that. I don't really know you, but I'm going to say why investing is tough. Why is investing tough? You see on the screen here, this is Amazon. Okay, you can see it. So and this is the when they short after IPO. And now look at this, down 95%. Okay, let's say you got in shortly after the IPO. You timed it. Maybe you got in when it started to go up here. Okay, you got some bigger bars here. You got in, and you wanted to invest in this. You held through this, and then it comes down to here, this point, and you're underwater. You're underwater, right? Maybe maybe this break here, you're up a couple 100%. Okay. The point is, if you were in this Amazon, you held it through that big bubble, and it looks like a bubble now. You're negative on it. Okay. You were up, and now you're down on it. Okay. Or maybe you can imagine that maybe you got in, when you had this big bump up, and maybe you took this peak here. You made 100%. Okay. You had a 10x there, but what happened? We know what happened with Amazon, right? We know what happens. Okay. Let's look and see what happens. Okay. That's what happens. And at this point, you think about what the media is doing. Amazon. Just think about what's in the financial media at this point. Probably Amazon was a bubble. It's dead. It was an internet bubble. It's going to go bankrupt. All this stuff. And what happens after? Okay. And remember, this is on a weekly. So on a daily, it's going to be more painful to sit through this, because you're going to have to sit. You're going to have to see. It's not going to be near as clear as it is on the weekly. Okay. Now it really looks bad. Okay. Especially there. Okay. You've seen the bubble. The bubble's collapsed. And, it looks like it's going to zero. It looks like it's bankrupt. And we see this. Okay. So the point I'm making is there's nothing that tells you to be long here. I'm down at this point. There's essentially nothing other than faith, conviction. I don't know what you want to call it, but plan. There's nothing that says be long here. From a trading perspective, you shouldn't be long here. Not if you're a trader, right? Maybe you should have been long somewhere in here, but you shouldn't be long here. And the reality is, it's one stock. If you held it, we know what happened, right? You could retire on this one stock with a small investment. And Amazon, of course, is not unique. You can go to Bitcoin. Okay, put it on the weekly to make it a little quicker to calculate. But we know that Bitcoin, most people know, has had several 85, 9% drawdowns. And some of them early on, you might have said, well, it's early. But the one that really I think was tough was that when we, so 80%, there's a 73, 70, 78, 78%. Okay. And this one would have been really tough. I think this one would have been really tough because we had that crazy run up. Remember, at this point, no investors were touching it. No institutional investors were touching it. You're down 84%. And the volatility's come out. Okay, retail's tired of it. They pretty much everybody called it a bubble, right? And we're down to 3,000, and there's no activity. Okay, you get one little bounce there, and it comes back down. You lose 50% in a day. In 2 days, you lose half your money. You drop from 8,000 to 4,000. Okay, you've got your double top there. Looks like a bubble, and again, this is probably on logarithmic. No, that's on regular. Okay, and what happens? This is what happens, right? The only reason to be long at this point is maybe faith. Maybe you just have belief in it, but there's no rational reason. There's no quantitative reason. There's nothing you can infer from the price. Okay, you could come back and say, oh, yeah, but it's jumped 80% before, but there's really nothing. Okay, even the people were calling for bounces all in this time period. They pretty much shut up here, and this lasted. Time is the other factor. Okay, time is the other factor because the price. The length of decline is one factor, but also the time. And this was a long time. This peak was 2017. It was before we took out that high was in 2020. Okay, you know, several years. It took several years. Like, what was that? 17, 18, 19, 20, 3, 4 years. You know, probably 3 years there. And before we took that out. Now, okay, you look at the S&P 500, the same thing. A lot of people think, now I've timed markets. Now, there's a difference in timing markets for, I do think there's opportunity for timing markets for trades on the longer time frame, right? Because everybody's looking at day trading. Everybody's looking at scalping a couple points off the ES. It's super difficult, right? Keep in mind, everybody talking about consistency in trading, and what did the mathematicians, the scientists, the investigators, what did they get Madoff for? They didn't say he made too much money. They say he was too consistent. His returns were just too consistent. Yet everyone in trading says be consistent. Try to be more consistent, right? You develop consistency. Yet the one thing that they said you can't do is not that you can't make a fortune, but you can't be that consistent, right? Think about that. S&P 500, right? Now, again, you'll see the similar type of a pattern. It's not near as pronounced, but here's the thing about S&P. Okay, the drawdowns might not be as much. They're about 50%, up to 50%, 20 to 50%. I shared that in a recent video of my sort of analysis. But here's the thing. People say, I'm an investor, right? Look at this. From the peak to peak here was 420, with 3,000 days. You went from 2000 to 2007. S&P 500 did not make a new high. And actually, we didn't make a substantial new high. We didn't start really making new highs until 2013. That's 13 years. Okay, so most people think about long-term investing as being a long-term investor as I'm going to hold for a year, or 2 years, or 3 years, or 4 years, or 5 years. The long-term returns are calculated probably over 20, 30 years. Okay, and you can go back and see there's been multiple flat periods in the S&P 500 for 10 years like this. You can find these periods where we're just going to range for years and years and years and years. And what's your time horizon? Now, I do see there's timing opportunities, okay, on the longer time frames. There's trading opportunities. And, I see some of those. They're hard to, I did well in Bitcoin by doing some of the longer time trading opportunities. Trading off the monthly, weekly. That's probably some great trading opportunities there because everybody's trying to capture a point in the ES or whatever, or trying to hold Bitcoin or trying to hold something for like a 10x or something. But whereas, there's probably opportunity trading and timing, right, on these time frames. The problem with that is, and the difficulty with that, nothing's easy. The difficulty with that is simply that you're because you have fewer trades, your standard deviation of trade tends to be bigger. And so it means you have bigger losses and bigger wins. And, we know that from a trader perspective, you want small losses, but, your risk to reward can be very good if you had timed, if you caught this low here, right, somewhere in this area, maybe here, okay, you had a 64% return, but the most importantly is your risk was only 20%. So you had somebody cut the peak, but you had basically like a 4 or 5 to, you had like a 6 to 1, a 5 to 1 reward to risk. And that's because you were on a longer time frame. So I think there's certainly opportunity for trading on the longer time frames. And that may be the easiest time to trade is longer term trades. There's probably could be the best trading opportunities there are really. Because there's less competition. You're not competing against the high HFT. You're taking risks that other traders, directional risks that other traders don't want to take. And you say, well, yeah, but how could you have called that? Okay, maybe breaking this trend line be one way. Okay, maybe on a monthly, having an up month would be another way. Let's see what that looks like. Okay, let's just see. Okay. You broke the trend line and you had them for an up month. Maybe that was the your timing signal there. Okay, and it worked very well. Okay, but most people ain't looking to do this stuff, right? And there's probably a lot of opportunity here. But in terms of investing, right, we're not talking about investing. Investing is holding for the big one, and it's difficult, right? That's the whole topic of this video is investing is much more difficult than people would imagine because and something like Amazon. The true investors, they didn't sell for 100%. They didn't sell for 200%. They were probably in a couple of these, and they looked for their 20x or 30x, and So I think it's tough because there's no logical reason to be in some of these names at certain times. I could see myself again. We've started with the know thyself. It's very hard for me to sit through and hold this. So the answer, maybe diversification. With one thing. The other thing is if you can't, for myself, it's harder to be in a position with no hope, no evidence that's going to work. I like the time markets. I think it's much easier, but nothing's easy. Right? So I could see I could time this would make more sense. But of course, there's no reason to try to time this. When it looks like this, right? There's no reason to believe that you'd be timing this. So that's the topic. Investing is not as easy as it looks.